Good afternoon and welcome to Not Minding My Own Business. I am your host, Russell Farbiars, your estate planning and elder law attorney. And I am joined here today by Wit Hastie. Wit is with the Spots Insurance Group. Welcome to the show, Wit.
Hey, Russell, thanks for having me.
Sure, it's wonderful to have you on the show. Wit, you and I met, I'd say, beginning of the year at a networking event, and we seem to have had some very good conversations. So I thought it'd be great to have you on the show.
Yeah, absolutely. Just kind of meeting you at the an event at the Reading Airport, and now we're here. So it's not always the normal route for me.
Yeah, it was a very interesting event because, as you said, it was at the Reading Airport, but we weren't. We were in like one of those. I guess it was one of the departure areas, but it was almost eerie. Because there no flights going anywhere.
Yeah, exactly. It's not normal to be able to walk around an airport without security, or just kind of be able to be like, oh, I'm just going to walk through this metal detector without stopping. It's it was cool.
Yeah, you didn't have to take your shoes off or anything,
Yeah, convenient.
So Whit, tell me a little bit about what you do and what you do at Spots Insurance Group.
Yeah, I'm a personal lines manager for Spots Insurance Group. I've been with them for 5 years. Previous to that, I had my own insurance agency, which I merged with Spots Insurance Group. But ultimately, what we do, and I guess the simplest definition of insurance, is we just protect against financial loss. And that's everything from personal lines, your auto, home, umbrella, commercial, just regular business insurance. We do life as well. But yeah, that would be the focus of what Spots Insurance Group does.
Okay. And as personal lines manager, what is your role specifically?
Yeah, so I manage a group of agents through our different locations where we deal with a whole bunch of different companies. We're an independent agency. We have a bunch of different carriers we work through, where my job is basically, if you run into issues with underwriting questions, if we're trying to place a risk and make sure it has not only the right protection, the right price. We certainly have plenty of customers that have homeowners insurance where there might be an issue with a claim. There might be an issue with, okay, they're thinking about getting a certain type of dog. Will their carrier be okay with it? I'm the person who basically points our agents in the right direction of what the carrier might be. And if there's issues with carriers, they get escalated to me so I can assist.
Okay. So you're the problem solver.
Hopefully. I'd like to think most of the time that I've been doing this a decent amount of time. So I've got some, a good amount of experience that hopefully can point us in the right direction. But just like a lot of other industries, there's always something new. And certainly in the market that we're in right now, we're just constantly learning.
So how is the market for insurance changing these days?
It's a pretty tough market now. Certainly your everyday person feels it. Prices are going up. I don't know if there's any carriers that are staying flat, and there's certainly none that are reducing their premiums. Ever since the pandemic, there's just been all sorts of changes. I think a lot of people who were homeowners felt them before, where the cost of lumber went up 150%. It's still higher than ever before. Finding a contractor is really tough still. I mean, 2 years ago, it was almost impossible. They were just booked constantly, where those types of things have effects on carriers and how much they charge. If a claim takes longer to process, that's more costly. If the cost of the materials is more, well, that's going to get passed on sooner or later. And in about the last year, the auto insurance market has changed a lot because there's been part shortages. The value of vehicles have gone up significantly, so insurance carriers are paying out more there. So we're definitely doing a lot more educating and explaining to people, because everybody's dealing with inflation as well. It's kind of a perfect storm where we haven't seen something like this in a long while, but we're still able to come up with solutions and hopefully find the right places for people.
So premiums are up largely because inflation and supply chain issues.
Mm-hmm. Correct.
So yeah, and this sort of affects every industry out there. It seems that the supply chain got disrupted in 2020, and it just seems like we almost can't catch our breath.
I think that's absolutely true, where carriers were just caught off guard. It's just, you're not expecting a pandemic to come along. For a while, people were selling their cars, just going, well, I'm not going to need this for a while. I'm working from home. Maybe they were a 2 or 3 car family. Now they're fine with 2 or 1. It's okay. And insurance carriers didn't really have a playbook of what to do. So they made adjustments slowly. And yeah, they're just kind of catching up now, where I think that's one of the things where we may talk about this at some point, but kind of educating the client, educating the customer. Everybody tries to do that to some degree in their industry. Well, everybody gets the, hopefully the conversation from their agent of, this is how your coverages work and this is why you should have them. Now, and we've been doing this actually before the pandemic, but kind of explaining how the industry works. Some inside baseball of, this is how rates work. This is why it's going this direction. Yeah, you may want to move to a different carrier, but believe it or not, your carrier may be ahead of the curve in their increases while these other carriers are behind. So kind of having those sorts of conversations where people want to obviously save money. People don't want to feel like they're getting ripped off. And that's something that we spend a lot of time just talking about, to just kind of explain the realities of the market and the industry.
So what are you telling people? Is it just the inflation and the supply chain, or are there other factors that go into determining the rates?
So those are the things that I think most people understand. They've maybe seen it in the news. They've certainly heard it. It's hard to avoid it. We do give them some detail, as I just mentioned a second ago. Let's say somebody has been with a carrier for 5 or 6 years, and they're unhappy because their prices in the last 2 terms has jumped significantly. One of the conversations we can have, because everybody wants to, not everybody, a lot of people often want to go, I want a better price. I want the same coverage for a better price. So we have the normal conversation there, but we're likely to have a conversation similar to this of like, hey, Russell, I get it. You're unhappy with your pricing. It's market wide. It's not just the state. It's across the nation. In the last 2 or 3 years, I think there's been 18 weather events when there's been over $1 billion worth of damage. Carriers are increasing accordingly. But what we will tell you is this: we could move you, and let's say you're paying $2,000 and we can save you 10%, $200. What we can tell you is the carrier they've taken a lot of increase. They're kind of ahead of the curve. The one that we think can save you some money here, we haven't seen that many increases out of them. We can see what they've registered with the state. You're going to have some increases coming along. And some of the other things we can mention is carriers look at how long you've been with a carrier when they put you in a tier of pricing. If we wait a little bit, wait for the market to stabilize, we can take your 5, 6, or 7 years of history and maybe get you a better price in the future. Because once we move you over here, you're starting that insurance time clock from scratch again, where if a year or 2 you're unhappy again, we're going to have fewer options. So we're having more of those conversations, which a lot of our clients appreciate, because we don't think most people are explaining that.
Yeah, that's interesting. I didn't know that staying with the same carrier would have a benefit from a pricing perspective. But it sounds like it does. Why is that?
Yeah, think of it this way. If you are somebody who's hopping from carrier every 6 months or every year, all carriers, except maybe a couple, run reports, and they can see that during the quoting process, and they can go, okay, this person is a shopper. There's no reason for them to put you in their best tier of pricing, because there's a good chance a year from now you're going to look again. When they run these reports and they see somebody who's been there for 5, 6, 10, however many years that it's a significant amount of time, they're going to put them in their ultra tier, their platinum tier, because those are the types of customers and clients they want.
That makes sense. I never thought about it. I personally, I think I've been with Erie probably for at least 10 years. And now I understand why my policy is called the Ultra Pack.
Exactly. Yeah.
But I never thought about that. I really never thought about it. That's interesting. Now I want to talk to you a little bit about homeowners insurance, because I think this is sort of interesting. And maybe it's because I was just looking at my policy earlier, but I know that there's a difference between what is covered for replacement cost. And I thought, I was hoping you could explain that a little bit, because I think it's a really interesting, and I think most people don't really know it.
Yep, absolutely. So you're absolutely right. You mostly see this with homeowners. There's something called replacement cost, and there's something called actual cash value. So if you have a loss and you're trying to get back the value of what you had, you almost always want to choose replacement cost. One of the best ways I can think about this is, let's say with every home, with every property policy, there's the option at least to get contents coverage, your personal property. Let's say you bought a big screen TV set for $600, and with whatever carrier you're with, they have some version of replacement cost on contents, where you pay $600 for a big screen TV. If it burns up in a fire, gets stolen, they will make sure that you will have enough money, at least that's what they're supposed to do, have enough money to get that big screen TV, and they're not haggling over the $600 you spent. But if it's 3 years old, you only have actual cash value, they will give you the actual cash value, the reduced value of that at the time of the loss. So it kind of comes down to something we say very often here: what's the point of paying for insurance if it doesn't do what it's supposed to do when it comes claim time? So it's very easy at the moment to kind of, a lot of people will choose, I don't know if I want to spend the extra money for this, but in most cases, like you're talking about, you want the replacement cost. Otherwise, you're going to get shorted a little bit in what you have.
Yeah, you're gonna get hit with that depreciation deduction that people don't think about, and this applies to even to the home itself, if I would understand correctly.
Yeah, there are most standard carriers, they are doing replacement cost, or if you have a mortgage, the mortgage company wants you to have
Right.
replacement cost. They won't accept a basic policy that has actual cash value. But depending on what sort of risk you have, there are people that go, look, I've bought a house, maybe it's not the best house, they have to fix it up or something like that. They bought it cash. They may be somebody who goes, you know what, I'm fine with the basic policy just to cover this. They're not as worried about the risk, where we are very thorough and try to explain, yep, here's what happens if there is a loss. You have to be comfortable with that, because as we spoke about earlier, we're trying to protect against financial loss here.
Mhm.
Do you have an extra 20K necessary if you lose something to try to get this back? Are you okay with just losing the house and just going away with the cash? Where, yeah, we almost always recommend replacement cost unless somebody has some sort of special situation and they go, yep, this is what I want. And yeah, we just want to make sure everybody knows what they're getting into.
Yeah, and that's important. That's important, and and it does matter what the risk tolerance of that particular client is, because if they have other resources, or they're not worried about it. But I think it's good that you provide that information. Now, how do you calculate the actual dollar amount that you're putting into the policy as the replacement cost?
Great question. So there are some agents and some carriers where they will go off of the price of the home. That's really not how it works. One of the best ways I think to explain this is there's market value and there's reconstruction cost. They are not the same. If you own properties in 2007 or 2008, you would have seen a very simple example of the problem there. Your home value went down a lot after the bubble burst, but the cost to reconstruct the home would have gone down maybe a little bit, but that's tied to labor and materials. The cost of your home is, that's market value. So when it comes to the calculation of it, we're not going, okay, you paid 400,000 for your home, we just put 400,000 over here, we're good. Because as we've seen, cost of lumber and anything like that has gone up. There's something called a reconstruction tool that almost every carrier has, unless there's some carriers that have really good information where they just have it built into their systems. But most of them, the agent manually asks you questions. They'll go ahead and go on Realtor or Redfin or Zillow, pick up some main details. But then we have to ask a bunch of questions. Do you have a deck? Is it made out of wood or is it made out of some sort of composite? Do you have a pool? Do you have on the inside of your house? Do you have plaster if it's an older home, or do you have drywall because it's a more recent home? Because as you would imagine, the cost of finding a contractor to replace drywall, dime a dozen. You can find them all over the place. If you want plaster because you're looking to get exactly what you had before, that's going to be a different sort of contractor and a different sort of cost. So we have these reconstruction tools where we ask all these questions and it's calculating that reconstruction cost. God forbid you lost the whole home.
Yeah, that's great. That's great to understand how that's calculated, because I know when I first looked, when I first bought my house, and they showed me what the replacement cost was, and I said, but I only paid this.
Mhm.
But it's, it's good to understand how that works. Now,
Exactly.
another area that people seem to try to save money on insurance is on car insurance. And this is between, the tort versus limited tort distinction. And can you explain a little bit about what that distinction is?
Absolutely. So not all states have tort. Pennsylvania, I think, is one of, I think, 11 states that has it. So tort determines if you're able to sue for pain and suffering. So let's say you're in an accident, the other party is at fault, and you have bodilies in your vehicle, and you want to be able to sue for the max. You want to be able to go, look, I'm going to be out of work. This has changed my way of life. I won't be able to do all the things I love to do. Without full tort, there's only a few situations where you may be able to sue for that. So let's say the other driver was drunk, or you lose a limb, like in everyday ability, or lose a limb, or losing an everyday ability, like to hear or see. That might be something where you might be able to sue for pain and suffering, which is what tort is used for. Otherwise, you're not going to be able to sue for it if you have limited tort, because it limits that ability. So the thing we run into the most often is somebody gets rear-ended, their back is all jacked up. They want to sue for more, unlike losing a limb, or if you already have full tort, or if you lose ability like to hear or see, where it's kind of obvious what the damage is. It's unlikely you're going to get compensated for that. So if you're somebody who, I don't want to say you're litigious or something like that, like you're just going to run around and sue for no reason, but if you're somebody that wants to have that right to be able to sue for that, it's not a guarantee that you'll get what you want. But in Pennsylvania, you want full tort. If you're somebody who goes, you know what, it's an extra cost, because full tort does cost more, and I don't want to spend that, and I'm willing to take the risk, or I don't think I would ever take the time to hire a lawyer, then limited tort may be something that's a better fit for you.
Yeah, again, just good for people to know that the choices they have when they're choosing their insurance coverage.
Yep.
So how did you get started in insurance work?
That's a good question. It's been so long. Sometimes I have to go back where it's funny. I think we can all agree, to the majority of people, insurance is not the most exciting topic. It just isn't. Ultimately, one of the reasons I looked at insurance was its stability. Is that it's a industry that helps people, and it's constantly evolving. I had a couple friends that are in insurance. Literally, I talked to one of them for over a year, where he was somebody that recruited insurance agents, and it took me a while to kind of understand, because I was like a lot of other people. I looked at my declarations page, I looked at the price at the bottom, and okay, that seems like it fits. I didn't look at anything else. And after talking to somebody, there was just a lot more information about it. There's a lot more to it, like what they're trying to do. Like, even when you take the classes to get your license, and they talk about Lloyd's of London and how insurance worked centuries ago, it's actually interesting, the amount of work, whether it's actuaries, just whomever is just putting in to try to predict, how do we provide coverage, how do companies remain solvent. There's just a lot to it. But ultimately, it was something where I realized I didn't know anything about what I was paying for, and I was going to be paying for it for decades. And when it came to the actual job, we're not selling people Maseratis. We are, in a lot of cases, helping them purchase something that not only protects them, but they're legally required to. If you have a car, you're going to need insurance. If you want to buy a house that has a mortgage, you're going to be required to have insurance. So it was something where it just made sense, where, okay, we get to explain to people how something they have is going to work, where I have to admit, I know it's certainly possible that an agent explained it to me at some point and I just didn't retain it, but nobody called me for reviews or said, hey, what's your situation? Where that's what we do here, is just kind of reach out to people. Are you in the same situation you were a year ago? And if so, do we have to, if so, great. If not, do we have to adjust things? So that's kind of the reason where it just didn't seem as interesting as it ended up being. And I'm glad I made the leap.
Very nice. And what about Spots Insurance? I mean, what's the origin story on Spots Insurance?
So Jeff Spots is the owner. We have a couple owners as well, but he is the primary owner. He opened the agency in 1993. So he's been doing this a long time. Started off as a captive nationwide agent. So captive meaning he can only sell nationwide. But in the last, I think 3 or 4 years, we've become an independent agency. But yeah, Jeff has been doing this for a long while. Like, he's told the story before where he started off in a small office with a small set of files and a cabinet and just built it from there. And the industry has certainly changed a lot since, 93 till now, and certainly in terms of technology. But ultimately, he built up the book, partnered with other agencies, brought them on board, which not only got us into a different situation in terms of expertise. He started off mostly in personal lines. We now do a lot more commercial because businesses certainly have plenty of needs in protecting their assets. But it just slowly built up and has turned into one of the biggest agencies in Pennsylvania.
Yeah. So where are the locations for Spots Insurance?
Yep. So we have locations in a few different counties. We're in Lehigh, Schuylkill, Carbon, Chester, and Lancaster. So we have plenty of locations because we have plenty of people that come and see us in person, and that's certainly what we like. But if we have people that prefer to do it over the phone, we're there for them as well.
And if you're doing it over the phone, you can probably work with people anywhere in Pennsylvania.
Absolutely. Yeah, we're licensed in probably, let me see, I think 10 different states, but the bulk of our clients are in Pennsylvania. But yes, if somebody walked into, like I'm in our Westchester location today, if somebody were to walk in today, I could write them a policy. I could just as easily, if they were in the northeast corner and Erie of the state, if they called in, we can do the same thing there. I mean, that's something where the technology has changed, and certainly with the pandemic, we've all learned how to work in different situations, so we can adapt to any of this.
What is something that you think that people should be more aware of about insurance or about what you do that they wouldn't otherwise know?
So I think the most important thing, because I think a lot of agents have conversations with customers where they talk about, look, if you're running around with state minimum limits for your auto insurance, if this were to happen, would you have the money to pay for the gap between what is owed, like on your car, and what you have, in your assets? We have those conversations all the time. I would say one of the most important things people need is, or should know, is a little bit of the education we've kind of talked about earlier. I think a lot of people think that you call an agent and they can kind of move the agent up or move the premium up and down, like that there's sometimes some magical way to get a big discount here or there, where it's just important to know that how carriers work, what they're looking for. Because if you know what carriers are looking for in a potential client, you can work it in your favor. Because a lot of carriers, a lot of agencies, they have access to the same carriers. They provide the same coverages, the same endorsements. What you need is an advocate, somebody who's looking out for you. I think we're very, very good at that, but also somebody who's kind of show you how this works, so you can get to not only to the price you would like to pay, but also get to the coverages that come along with it. Because there are some carriers where if you take this coverage, and this coverage, it will help with accessing these coverages. There's different, like you mentioned, you have the Ultra package with Erie. There's a bunch of different packages where if you do one, you might be missing out of this. If you switch from one carrier to another, you might have gained a better price, but you just lost this coverage. So I think if I would say to people listening, talk to your agent, try to get there and get that information. Not only because it's going to be more helpful, but it might make insurance just a little bit more interesting and a little bit more important. That way, come claim time, you're not asking the questions you wish you would have asked before the claim.
Right. That makes sense. Now, Whit, this has been great. I really appreciate you coming on the show. If any of our listeners are looking to get in touch with you or one of your colleagues at Spots Insurance, what's the best way to do that?
So we have everything from website. Our website is spots4insurance.com. That's spots with 2 T's. We have a bunch of different locations. We're on Facebook. We're on Instagram. We have a pretty big social media presence. Yeah, there's, depending on where you're located, our main number would be 610-374-2911. That's our headquarters in Wyomissing. So yeah, I would say we are pretty much all online if you're looking for us, but yeah, call, stop in, we are available.
All right. Well, thank you, Wit, so much for shedding some light on the mysteries of insurance here today for us.
Thanks a lot, Russell. I really appreciate you having me.